All right, let's get into it. We are staring down a monster of a document, the 500-plus page draft red herring prospectus for Bharat Coking Coal Limited's IPO. Now, a document like this can feel, well, impossible, but our goal today is to take this giant wall of text and turn it into a simple, powerful toolkit that any investor can use. Yeah, I didn't think so. These things are designed by lawyers for lawyers. They're dense, they're complicated, and they are definitely not bee-treating. But buried inside all that jargon is everything you need to know about a company. So think of us as your guide. We're going to cut through the noise for you. So here's how we're going to tackle this. First, we'll quickly break down what this document even is. Then we'll introduce the star of the show, Bharat Coking Coal. After that, we get to the really juicy part, the official risks, a deep dive into their financials, and finally, what their plan is for the future. Sound good? Let's go. Okay, first things first. Before we can even talk about the company, we have to understand the rulebook. So what exactly is a prospectus, and why does it matter so much? An IPO, or initial public offering, it's a company's big debut. It's the moment they step out from behind the curtain of being privately owned and onto the public stage of the stock market. And to do that, they have to lay all their cards on the table for regulators and, more importantly, for potential investors like you. And this prospectus? That's them laying their cards down. Now, what we're looking at is technically called a draft red herring prospectus, or DRHP. You can just think of it as the 99% final version. It's got all the nitty-gritty on the business, the finances, the risks, but the two big question marks are the final price and the exact size of the offering. Those details get locked in right at the very end in the final prospectus. All right, now that we've got the paperwork out of the way, let's meet our main character, Bharat Coking Coal Limited. Who are they, and what's their story? This one number really tells you almost everything you need to know. BCCL controls over 58% of India's domestic coking coal production. Now, coking coal isn't just any coal. It's the essential ingredient needed to make steel. So BCCL is literally at the foundation of India's ability to build anything. Roads, bridges, buildings. This is a huge, strategically important company. So who are they exactly? Well, they're a key part of the massive state-owned Coal India. They've been around since 1972, running a network of 34 mines. Their job is to feed the country's hungry steel and power industries. And back in 2014, they earned the mini Ratna status. That's a government nod to a public company that's both profitable and performing well. Okay, every investor should flip to this section first. It's called risk factors. This is where the company has to, by law, tell you everything that could go wrong. It's usually dry and full of legal speak, but this is where the real red flags are hiding. Let's pull out a couple of big ones. Wow, okay, so this one jumps right off the page. BCCL is stating right here in black and white that their insurance coverage isn't what you'd typically expect for this industry. They're just not fully covered for all the things that can happen in their day-to-day operations. So why is this such a big deal? Well, mining is a dangerous, heavy-duty business. Accidents happen, equipment breaks. If a major incident occurs and they aren't properly insured, that loss, which could be huge, comes directly out of the company's pocket. That hits profits, and that in turn hits shareholder value. And here's another one that's all about governance. The board only has one independent director. Now, independent directors are supposed to be the unbiased voices in the room, the ones looking out for the interests of all shareholders, not just management. Having a lack of them raises some serious questions about oversight and accountability. All right, time to talk money. Let's do a financial health check on BCCL. We'll look at the big numbers, sure, but more importantly, we're going to dig into the footnotes and see what the auditors have to say. And on the surface, the story looks pretty good. You can see here that total income has been climbing nicely, a clear upward trend. This is exactly what you'd want to see from a company heading for an IPO. It suggests a healthy, growing business. But as any good investor knows, the headline numbers never tell the whole story. The real devil is always in the details, or in this case, in the auditor's notes. And there it is. This is a direct quote from the Comptroller and Auditor General of India, the top government auditor in the entire country. And they're saying that the company failed to disclose certain facts that are integral to the understanding of the financials. That is a major red flag. So what's the issue? It's about a massive tax credit on their books, over 15,000 million rupees. Think of it like a giant gift card from the tax authorities that the company is counting as an asset. But the top auditor is raising a flag, saying, hey, because of law changes, that gift card might be expired or unusable. The big concern is that a huge asset on their balance sheet might actually be worthless, which means their financial position could be weaker than it looks. Okay, we've been deep in the weeds of risks and accounting. Let's pull back and look at the big picture. What does the future hold for coal in India, and what's BCCL's game plan to navigate it? This data, straight from the prospectus, tells a really important story. You can see that core industries like cement are still growing. And while the growth in coal demand is slowing down, it's still growing. The key takeaway is pretty clear. Despite the global shift to renewables, India's industrial engine is going to need a lot of coal for the foreseeable future. So how does BCCL plan to meet that demand? They've laid out a four-part strategy. 1. Expand their current operations. 2. Modernize their equipment to produce higher quality coal. 3. Bring old closed mines back to life with the help of private partners. And 4. Focus on sustainability with project in land reclamation and solar power. This is their roadmap for the road ahead. So there you have it. That's our toolkit for the BCCL prospectus. On one hand, you have a dominant market leader in a critical industry. On the other hand, you have serious flags on risk, governance, and their accounting. It all boils down to this one central question for any investor. In a world that's slowly but surely moving away from fossil fuels, can a legacy coal giant like this truly adapt and thrive for the long haul? That's the real billion-dollar question.